For 6 years straight, it was voted the most innovative company in America. Wall Street adored it. Its stock kept climbing, and then, in a matter of weeks, it simply vanished, wiping out $74 billion and thousands of people's life savings, because behind all that shine, Enron was faking almost everything. Here's how they did it. In the 90s, Enron looked unstoppable. It started as a boring gas pipeline company and reinvented itself into a Wall Street superstar, trading everything from electricity to weather. Its stock soared past $90. Executives were treated like geniuses. On paper, the profits never stopped growing. There was just one problem. A lot of those profits weren't real. Here's the first trick, and it's simpler than it sounds. Imagine you sign a deal that might earn you $1 million over the next 20 years. Normal companies count that money as it actually comes in. Enron didn't. Enron booked the entire imagined profit as income today, before earning a single cent of it. And if the deal later lost money, that loss quietly disappeared. It's called mark-to-market accounting, and it let Enron report enormous profits that existed only on paper. But fake profits create a second problem: real debt piling up. So Enron's finance chief built a maze of secret side companies, shell businesses that existed only to swallow Enron's losses and hide its debt off the books. To the outside world, the giant looked spotless. In reality, it was quietly drowning. In late 2001, it all unraveled. The stock crashed from $90 to 26 cents, and here's the cruelest part. Thousands of employees had their retirement savings tied up in Enron stock. And during the collapse, they were locked out, forbidden from selling, as it fell to nothing. Meanwhile, executives had already cashed out. The chairman alone sold around $70 million in shares in the final year, while publicly telling his own employees to buy more. When the dust settled, Enron was gone. Its auditors were caught shredding documents and collapsed too. The chairman was found guilty at trial, but died before he could be sentenced. The CEO went to prison and still insists he's innocent. The finance chief pleaded guilty, but the deepest lesson is quieter than all of that. For years, the smartest analysts on Wall Street looked at Enron and couldn't actually explain how it made its money. Everyone just trusted that it did. And that's the warning. If no one can explain how the money is made, maybe it isn't. Subscribe for more stories nobody talks about.